All right, traders, welcome back. Today we're taking another look at AIA, and honestly, the market is teasing us right now. The setup is still forming, price is still trapped, and this kind of slow movement usually means something bigger is building. So let's break everything down and make sure you're fully prepared for the next major move. In our previous analysis, we talked about two very important zones, the support level and the resistance level. I explained how price should behave around these zones and what we should do depending on whether the market respects or breaks them. Now let's take a look at what has changed and what hasn't. If you look closely at the chart, you'll notice that price hasn't made any significant move at all. There's no strong push to the upside, no clean rejection to the downside, just slow, tiny candles printing one after another. This is a clear sign of low volatility and pure consolidation. It simply means the market is in a sideways phase with neither buyers nor sellers in control. Everyone is waiting, liquidity is building, and the market is preparing for its next major direction. This is where patience becomes extremely important, because when price finally breaks out of this range, it usually makes a strong move. Now let's talk about the support level. If price drops back to our support zone and respects it, meaning we get a rejection or a bullish candlestick confirmation, then we're looking for a buy from that area. But if price doesn't respect it and instead breaks through with momentum, we do not rush in. We wait for price to come back and retest that same support, which will now act as resistance. That retest is where we look for a sell. This keeps us trading with confirmation instead of guessing. The same logic applies to the resistance level. If price climbs back to the resistance zone and respects it, we look for a sell. But if buyers are strong enough to break that resistance level, then we wait for a retest. Once the market retests and gives us bullish confirmation, that becomes our signal to buy and follow the new upward movement. None of this changes until the market actually interacts with either zone, so the only correct thing to do right now is to stay patient and wait. When the market prints small candles and moves sideways like this, it's telling us one thing: the big players are waiting. Liquidity is building on both sides. Buyers are stacking orders below support and sellers are placing orders above resistance. The market usually collects this liquidity before making its real move. That's why consolidation often leads to strong breakouts. Smart traders don't panic during this phase. They wait for the market to show its hand. So here's my question for you. Which level do you think will break first? Support or resistance? Let me know your prediction in the comments. To wrap everything up, AIA is still consolidating with no clear trend direction. Our support is still valid. If it's respected, we buy. If it breaks and retests, we sell. Our resistance is also still valid. If it's respected, we sell. If it breaks and retests, we buy. No setup is confirmed until price reaches one of these key levels. So the smart move is to stay patient and let the market come to you. So that's the full update on AIA. Nothing major has happened yet, but this kind of slow, tight consolidation usually means the market is getting ready for a strong breakout. Stick to your zones, follow the plan, stay disciplined, and I'll bring you the next update as soon as the market makes a move. Until then, I will see you in the next video.